Donald Trump is talking about a 50-year mortgage. And to some, that might make sense, but a 50-year mortgage is dumb. For some, that might sound like a solution to unaffordable housing, but it's not. It's another financial trap that the banks and the politicians want you to fall for. The median age for a first-time home buyer is now 40 years old. So if you have a 50-year mortgage, you pay off that mortgage when you're 90 years old. The life expectancy of an American, I believe, is 79 years old. So in order for you to pay off this loan, you have to beat the average by 11 years. So today I'm gonna break down the math and show you guys who actually wins when you sign your life away for 5 decades. So why is this even an idea? Like, why are they even trying to make this happen? And it's because home prices are at an all-time high, wages are stagnant, and instead of figuring out solutions to fix all of that, what they want to do is finesse us even more. So this plan looks cheaper at first, but when you really look into it, it's designed to cost you hundreds of thousands of dollars more and keep you in debt for the rest of your life. The average home price is about $400,000, and I'm in a neighborhood right now, which I believe all these houses are anywhere from $400,000 to $450,000. So let's run the numbers. $400,000 house, 10% down, that's $360,000 at 6.5% interest. So your mortgage payment for 30 years would be $2,275 per month, just for the mortgage. And if you do a 50-year loan, your monthly mortgage is gonna be $2,029. So you're basically only saving $246 per month. And for that discount, you're gonna pay the bank for 20 years more. But that comparison is not even good because no bank is gonna charge the same interest for a 30-year loan versus a 50-year loan. Why? Because it's more risky for a bank to keep the loan. There's more time for things to go wrong. So I don't even think 6.5% is like a real number. I think the interest for that 50-year loan is gonna be anywhere from 7 to 7.5%, depending on where we're at that time. Let's assume the interest rate stays the same. Let's assume it's 6.5%, and let's look at the interest that you will pay. Let's assume that both loans are at 6.5%. For the 30-year loan, you're gonna pay $459,000 just in interest. And then for the 50-year loan, you're gonna pay $857,000 just in interest. If we go to 7%, you're gonna pay over $1 million in interest. So to save roughly $246, are you willing to pay $400,000 more for the life of the loan? I don't think that makes sense. And I know some people are gonna say that they can refinance, they can make double payments, and they could, make principal payments. Especially the way things are going right now, who's actually able to afford extra mortgage payments? I don't know. I don't see that as being realistic, but I know someone in the comments is definitely gonna leave that. So granted, the mortgage is cheaper. Now you have to think about, for the first 10 to 15 years, you're only making interest payments to the bank. You're not really touching principal till about the 7th year. So what does that mean? In order to sell a house, you have to pay anywhere from 5 to 6% on the commission side. So you're gonna be stuck with that house. Your break-even point is around the 7th year, and you won't be able to sell it, because if you do try to sell the property, you're gonna come out of pocket just to sell it. So you're not gonna be gaining any equity. And then the only equity that you will gain is if the house appreciates, and the houses appreciate by 3%. Your equity growth is gonna be tiny. And now add a 6% commission when you wanna go ahead and sell it. So your break-even point is somewhere around 6 to 7 years. So you can't sell it without losing money. So if appreciation slows down, you lose money or you're stuck. At that point, I think it's safe to say that you don't even own the house. You're just renting it from the bank. So who benefits from all of this? The banks, the real estate agents, and the government. Now, let's think back to COVID. They created an artificial demand because interest rates were so low, so more people wanted to buy properties. I remember back then, there was about 10 to 15 people making offers on the same house. People were going over asking. People were writing into the contracts that they would cover the cost out of pocket. So if the offer was $320,000 and it only appraised for 300, they would pay 20 grand on top just so they could get the house. And that was all created by the government because they wanted the economy to keep going. They didn't want anything to slow down, which created this artificial demand, and real estate skyrocketed. And the point was for it not to collapse. They were trying to save the economy. And then with this 50-year mortgage, the same thing is going to happen. Why? Because more people are going to be able to afford the houses, and it's going to cause more demand. And then on top of that, all the prices of the houses are going to go up even more. So the houses are going to be less affordable. There's going to be more people that really shouldn't be buying a house. Basically, the problem is going to get even worse. So the banks, they're going to be happy because that's 50 years guaranteed payments to them. The real estate agents are going to be happy because their commissions are going to go up because the prices are slowly going to go up. And the government, because they're going to have guaranteed tax flowing for the next 50 years. So to wrap this up, a 50-year mortgage is not smart. It doesn't give you freedom. If anything, it's gonna give you a forever payment plan that you're probably gonna die before you actually pay it off. And you might even give it to your kids and they might inherit your debt. So it's gonna make the issue even harder. So if you're interested in money, real estate, business, finances, I created a newsletter. It's free. Feel free to subscribe and subscribe to my YouTube channel. Thank you guys for watching. I'll see you guys next week.